Welcome to our tax planning webinar series, and thank you for joining us today. It is about that time of year, which is everyone's favorite, where we all start planning for year end and preparing for the upcoming tax filing season. We've put our heads together and come up with the top tax planning topics this year and created a webinar series. In today's webinar, we're going to be talking about the Employee Retention Credit, aka the ERC, and how it will impact tax planning. My name is Laurie Stiles, Marketing Coordinator with HHM CPAs, and I'm joined by some of our accounting experts and CPAs, Brittany Carmen and Chad Goodman. They've both been following the ERC legislation since its creation and have worked with many of our clients to secure it. Would you guys please take some time to introduce each of yourselves?
Hi, I'm Brittany Carmen, and I'm a Senior Manager with HHM. I specialize in accounting for numerous industries, including nonprofits, contractors, manufacturers, and distributors, and other non-public businesses. I've also been leading our Employee Retention Credit consulting along with Chad.
My name is Chad Goodman. I'm a Senior Manager in our tax department at HHM. I specialize in tax compliance, projections, consulting, buy-sells, estate planning, etc.
Awesome. Well, we all know or probably heard about the Employee Retention Credit by now. However, there have been some major updates regarding the ERC recently, and we will share those and discuss how the ERC will impact the tax planning. So let's go ahead and get started. And the first question is, of course, what is the ERC and how will it affect tax planning this year?
So the Employee Retention Credit is a tax credit that was created under the CARES Act to provide additional COVID-19 relief for businesses, with the intent being to encourage businesses to retain their employees.
One other thing to keep in mind is originally, if you took advantage of the Payment Protection Program, or PPP as we know it, you were not also allowed to participate in the ERC. After the passing of the Consolidated Appropriations Act, you were eligible with some restrictions to take advantage of both of these programs.
Okay. How does a business qualify for the ERC?
Businesses can qualify for the ERC in a few different ways. One, by experiencing a reduction in gross receipts of 50% in 2020 when compared to the same quarter of 2019, or a reduction of 20% in 2021 in comparison to the same quarter of 2019. Or they must have experienced a full or partial shutdown due to government order in 2020 or 2021.
And one thing to keep in mind on the government orders or full or partial shutdowns is these get very specific, and you definitely need to reach out to your legal and accounting counsel on this on a case-by-case basis to determine your eligibility.
Okay. What percentage of an employee's wages qualify for a tax deduction?
For 2020, the refundable tax credit is 50% of qualified wages per employee, with a maximum credit of $5,000 per employee for the full year of 2020. And then for 2021, this amount was increased, and the refundable tax credit is 70% of qualified wages per employee, with a maximum of $7,000 per employee per quarter.
Wow. So what is the maximum credit per employee?
So if we were looking at the period ended 9/30 of 2021, the maximum credit per employee would be $26,000. So that would mean that they were eligible for all 3 quarters of 2021 with a $7,000 credit per quarter, and the $5,000 credit in 2020 for the entire year.
All right. Now, how many employees must a business have to qualify? Is there like a specific threshold?
Yeah, there is. In 2020, a business with less than 100 full-time equivalents would be considered a small employer and could claim employee retention credit on qualified wages. And then in 2021, the small employer eligibility was increased to 500 full-time equivalents.
And so if you're a large employer, you can claim the ERC credits, but it's only on wages being in health insurance related to employees when they're not working or performing their typical day-to-day job duties.
Okay. What new entities qualify for the ERC?
So there is something called a recovery startup business, which would be businesses that started after February 15th of 2020, and they may qualify for an employee retention credit up to $50,000 per quarter in the last 2 quarters of 2021.
Wow. So how and when is the ERC claimed?
So you're able to claim the ERC once you've done your calculation by filing 941X, which is an amended payroll return. These are required to be filed quarterly. And so once you get your calculation in that specific quarter, you go back and file an amended 941X.
All right. And I know this is something you've helped a lot of clients with. What documentation is needed in order to calculate and claim the ERC credit?
So in order to calculate the credit, we would need a summary of payroll expenses by employee per quarter so that we can calculate that on a per employee basis, because each employee is eligible for that $7,000 credit or that $5,000 credit. And then we would also need the PPP loan draws and any forgiveness documentation related to the PPP, because any wages that are claimed for PPP forgiveness must be excluded from the ERC calculation.
Right. Is the ERC taxable?
The short answer is yes. It's going to, whatever your ERC tax credit is going to be a reduction of your wages on your income tax return that you file. So yes.
Okay. How does the ERC impact the year-end return?
So we mentioned earlier that you have to file a 941X to file for these credits, but you have a 3-year statute to be able to file that. It's important to get it done now, because when you're doing year-end planning, you need to know what your potential increase in income could be or reduction of gross wages is. So it's important to get it done now.
Okay. And then in closing, what is the guidance regarding the infrastructure bill?
So the House passed the $1.2 trillion infrastructure bill, and one key provision in that bill is the retroactive sunset of the employee retention credit, which would make wages paid after September 30th of 2021 ineligible for the credit.
Wow. All right. Well, that's a lot of great information. Thank you both so much for taking time to share with us. And thank you for joining us today. If you have any questions about what we discussed or any other items that may come up, please do not hesitate to reach out to one of our advisors or your CPA as well. Thanks so much.